Now, let's turn to the slowdown in venture capital. Total venture fundraising plunged nearly 40% in the first quarter. The initial public offering market has nearly evaporated, with just 6 U.S. startups going public so far. My next guest is the CEO of VantagePoint Venture Partners with $4.5 billion of committed capital. The firm is focused now on clean tech and has funded electric car company Tesla and the leader in solar thermal power plants, BrightSource Energy, among many other ventures. VantagePoint is probably best known, though, as an early backer of social networking and the site MySpace. Alan Salzman joins us now from our San Francisco newsroom. Alan, thanks for coming on. Let me ask you.
My pleasure.
Let me ask you, before we get to the green tech, and obviously it's incredibly interesting, especially because of the administration's push right now. Let's talk about the social networking aspect for a minute. You are famous, obviously, for having backed MySpace. What do you think about the future of MySpace and the social networking companies?
Well, look, I think social networking has become one of the major industries and one of the major trends from a societal viewpoint. And I think while MySpace was the kickoff and the granddaddy, if you will, that started it, it's obviously been extended and continued and will continue to move pervasively through society. So I think it is one of the key phenomena that we're seeing in terms of social interaction.
All right, and of course, you look at one of these sites and there's a lot already on them about being green and clean tech, energy. You are invested in about 70 companies, at least in your publicly disclosed portfolio, and about 25 of them or thereabouts are involved in green energy or clean tech.
That's true. We were the first of the major venture firms to move into clean tech aggressively. We actually did it in 2002, a little bit ahead of the current enthusiasm. And so we have had a running head start and have close to 20 people dedicated full-time to the effort.
Now, let me ask about the government's stimulus package and how it affects you. I mean, a lot of complaints right now lately that the money hasn't gone out quickly enough, and there's a lot there for green companies and clean tech, not to mention other grants and promised loans from the administration. How much of a help is this to the industry?
Well, I think right now it's more of a theoretical help than a practical one, because the money really hasn't started flowing other than some grants that were authorized, I think, under the 2005 legislation. So I think it's still to be determined when the money starts to flow. And I think the administration is grappling with finding the best process to make sure that that money goes to where it can most effectively be used. But I think the real issue is a pump priming mission rather than a permanent subsidy mission by the government. Whenever you see an industry going through change, and we saw it in the 80s and in biotech and PCs rising up to challenge the computer industry, we saw it in the 90s as datacom overtook the telecom industry, you need to allow the new technologies to be able to compete effectively with the entrenched incumbents. Otherwise, certainly in the clean energy world, we wind up with an energy policy dictated by Exxon, which I don't think is consonant with what people in this country want to see.
Does it give you, though, Alan, does it give guys in VC another exit strategy, or do you still follow the status quo as far as IPOs and selling companies after you get them going?
Status quo. The government is not an exit strategy. They can be, again, a bit of a pump primer. But ultimately, what we've got to do as venture folks to be successful is work with talented entrepreneurs to create the next level of Cisco's and Google's of the world, albeit in the clean energy and alternative lighting spaces, where there really are industries in need of radical transformation.
All right, Alan.
We still do things. I'm sorry.
Well, you know what? We're going to take a quick break. I want to come back and talk more about this. I want to come back and talk especially about some of the companies that you're backing and what you think of the IPO market. We're going to continue our conversation with Alan Salzman after the break. Stay with us here on Bloomberg. All right, now we are back with Alan Salzman of VantagePoint Venture Partners. And Alan, I want to talk a little bit about some of the companies that you back. About 25 in your portfolio are green energy or clean tech companies. The most interesting one to me, because I am fascinated by the car, is Tesla. It goes 0 to 60 in 3.9 seconds, and it's an electric car. What do you see as the future of this car? Because so far only, obviously, movie stars and big Wall Street traders can afford to buy one, and it doesn't go very far either.
Well, it goes 240 miles between charges. But we did Tesla really to demonstrate that we had reached the point using off-the-shelf lithium-ion batteries found in cell phones and laptops that we could, from a technology viewpoint, make the car that Detroit said was impossible. The fastest car on the road, a car that goes 240 miles between charges and costs $0.015 a mile to operate. And we got tired of arguing with the incumbent car manufacturers as to whether it was possible and thought, you know, it's just easier to throw them the keys and say, look, we didn't realize it was impossible. You have to forgive us. We just went ahead and did it. And from there, we think, Tesla's the equivalent of the Apple II of the industry. The entire automobile industry worldwide is going to switch to electric drivetrain because you not only get zero emissions, but more importantly, it costs less and is a more efficient, modern technology to propel cars.
It's an incredible car. Our Greg Miles test drove one of them, but I believe it costs about $140,000 to buy one. Are you anywhere close to an exit strategy with this company?
Look, the reason it costs $125,000 is because it's essentially a handmade car made in volumes of a few thousand a year. And what we've seen in everything, think of plasma TVs, is when we ramp up to full-scale production, when you build factories dedicated to the production, there is nothing that stops the price from plummeting. So the next volume edition of Tesla, for example, will be a $50,000 iteration. Still high for mass market, but that's version 2. And around the world, companies like Renault and Nissan and Mitsubishi and others have all started a process where I think we're going to see, literally within 3-4 years, an all-electric car that's in the $20,000 price range. Think of it as the all-electric Prius with zero emissions and a lower cost point.
Well,
then the question you have to ask yourself
I have high hopes for it as well, and wish you the best of luck with that. Let's talk, though, quickly about the IPO market. I mean, it's obviously been a tough slug this year. Do you see it improving here, or do you think you're going to have to wait until next year or 2011 before you can start really spinning some of these investments off?
I think we're testing the IPO markets during the course of this year. But I think it's a combination of two things. People getting less conservative in their outlook on one hand. But secondly, we've got to bring forward the companies that the IPO buyers think of as the potential next Cisco's and Google's of the world. I think when we've got the exciting companies to put before them, that's when we're really going to be able to test the enthusiasm. And I think that should start kicking in about 6 months' time.
All right. Hey, Alan, thanks so much for joining us. Alan Salzman there of VantagePoint Venture Partners.